What's up, you guys? It's Graham here. So it finally happened. Breaking news. We now have an official outline on Donald Trump's potential tax cuts. And I gotta say, this could wind up saving most of you watching a lot of money. In fact, he just laid out 6 categories that could soon get a complete overhaul. And that's why it's crucial that we break down exactly what's outlined, what this means for you, and how much money you could see back in your pocket at the end of the day. Because no joke, this could be the biggest tax adjustment that we've seen in almost 10 years. Although really quick, if you enjoy videos like this where I just try to get you the information as fast as possible, even if that means I had to cancel plans to get you this video out on time, it would mean the world to me if you hit the like button or subscribed if you haven't done that already. And as a thank you for doing that, I'll do my best to reply to as many comments as I can. So thanks so much, and also a big thank you to Incogni for sponsoring this video, but more on that later. Alright, so to start, let's just get right into it. In 2017, Donald Trump passed what's called the Tax Cuts and Jobs Act, which lowered taxes for practically everybody across the board, reduced corporate income taxes, and provided some pretty substantial benefits for anybody who was self-employed. However, these were all scheduled to expire by the end of 2025 if nothing was done. And as I'm sure you could see, something is currently being done as we speak. Or I guess as I speak. And these are the proposed changes. According to the Wall Street Journal, Trump outlined 6 tax priorities, with the first being no tax on tips, Social Security, or overtime pay. So let's start with tips. If passed, this would either change the definition of tips so that it's not treated as income, provide a tax exemption against tips, or provide a tax deduction against tip income when a person goes and files their tax return. On top of that, most people don't realize that this was actually a proposal introduced in 2024 by Senator Ted Cruz, and in it he stated that there shall be allowed as a deduction an amount equal to the cash tips received during the taxable year that are included on statements furnished to the employer. Or basically, since that's really confusing, all that means is that if you were to get $5,000 in tips, you would get a $5,000 deduction on your tax return, and then all of a sudden, no tax owed. Now, even though this could be a huge opportunity for some workers to increase their take-home pay, I will say there are some challenges this is likely to face. For example, would non-tipped workers feel like this is unfair and want to move to a tipping income to keep more money? Or could someone self-employed structure their income as a tip to save money on taxes? Not to mention, another analysis made the argument that very few low-wage workers receive tips. 37% of tipped workers earn so little that they pay no federal income tax. And if those workers report more income, they'd potentially lose out on other tax credits. For me, I'm personally in the mindset that if this passes, we're likely to see a deduction on tips up to a certain percentage of gross income and then phasing out as you begin to make more money. Plus, let's be real, most people earning cash tips probably aren't reporting it to the IRS. So if they allow for a deduction, they're probably not going to lose that much, if any, money. And the people reporting the income could use that income towards qualifying for a loan. But beyond that, we also have the second portion, which would be no tax on Social Security. For those unaware, this is a payment given to those over the age of 62 with money that's collected through a Social Security tax of 12.4%. Essentially, those who are working today pay for those who begin collecting. And as it stands right now, Social Security income is treated exactly as it says, income. That's why 85% of Social Security benefits are taxable at the federal level. But that could soon change because Trump recently revisited his desire to eliminate federal income taxes from Social Security income. And even though this currently brings in $50.3 billion a year, the reality is half of all Social Security recipients do not pay any federal income tax on their Social Security benefits because they don't make enough money to begin with, at less than $25,000 a year. So even though this one could be pretty substantial for retirees with incomes above that amount, it's too early to tell exactly how this is going to play out, especially since the Social Security fund is already projected to run out of money by 2035, at which point anyone after that would only be collecting 85% of the promised benefits. That's why chances are, realistically, if no tax on Social Security is passed, wealthier retirees would have significantly more discretionary income, and that could be a boost to the economy. But there would eventually need to be tax increases or cuts elsewhere to be able to pay for it. So we'll have to wait and see. And finally, we have no tax on overtime pay. See, as it stands right now, if an employee works more than 8 hours in a 24-hour period, everything beyond that is treated as overtime and paid at a rate of 1.5 times. So if you make $20 an hour for the first 8 hours, everything beyond that is paid at $30. And fun fact, by the way, if you're in California, they have something called double time pay, which pays you double your pay for hours worked over 12. Anyway, as of now, all of this income is lumped together and treated at the exact same tax rate. But by removing taxes on overtime, this could be a huge incentive and boost for workers to take on more hours. And as Trump says, the people who work overtime are among the hardest working citizens in our country, and for too long, no one in Washington has been looking out for them. Of course, this would come at a cost of $1.7 trillion of lost tax revenue over 10 years, but if Doge can successfully cut down on government spending, then I see no reason why this lost revenue would even matter, especially when they've already saved over $1 billion a day. Now, personally, in terms of what I think of this, I have a feeling there's going to be a lot of fine print, because the fact is, a lot of employees are salaried, so this probably isn't going to affect them. The other issue is that a lot of companies don't want to pay their workers overtime. They cap their hours at 8, and then they hire someone else to come in at the normal rate to avoid spending the extra money. So we'll have to wait and see exactly how this plays out. Kind of like the next one, which could be pretty big. Although before we go into that, even though tax cuts could help reduce the amount of money you owe, there is another hidden cost that most people never realize, and that's the fact that their personal data is actively being bought and sold. Look, whether you like it or not, your personal information is probably already floating around on the internet somewhere in the hands of data brokers, third parties, spammers, or anyone else who might want to target you. Now, even though this sounds like an alarming problem, the good news is that you have a right to protect your privacy and request that data brokers remove the information they have about you, and our sponsor Incogni makes that easier than ever. They do all the dirty work for you by reaching out to data brokers on your behalf, requesting that your personal data be removed, and dealing with any objections that websites or data brokers might have. And since many data brokers continue collecting information about you even after they've removed it, Incogni makes sure your information stays off the market by conducting repeated removal requests. All you have to do is create an account, grant them the right to work for you, and then sit back while they keep you updated every step of the way. This doesn't just help reduce the likelihood of identity theft, but also cuts down on spam phone calls, phishing attempts, and spam emails that we all seem to get on a daily basis. So if you're interested in having your personal data taken down, you could get 60% off an annual plan when you go to incogni.com/Graham and use the code Graham. They also have a 30-day money-back guarantee, so you could try it out risk-free to see if you like it. Thank you so much, and now let's get back to the video. Alright, so now let's discuss the next potential category, and that would be renewing the 2017 tax cuts. This means the top tax bracket's going to remain at 37% instead of the previous 39.6%. Those amounts would more or less be adjusted to inflation every year, and we're going to get another round of 2017 tax cuts that were fantastic for business owners. For example, that allowed a 20% pass-through deduction for business owners who operated an LLC or a corporation. It doubled the estate tax exemption to now $28 million, and it allowed a 100% bonus depreciation in the first year for business use, meaning if you bought a plane or a heavy piece of machinery, you could use 100% of the cost of that item as a deduction in the first year, even if you only put 10% down. That meant a lot of money left over for business owners if they knew what to spend their money on and how to do their taxes. The way I see it, this is going to be the easiest for Donald Trump to pass through Congress, because it really just keeps everything exactly as it has been for the last 8 years without any real changes. But in terms of what else he has planned, a few people could actually see their taxes go up substantially depending on which business they work in. So you're going to want to hear this. Although before we go into that, let's talk about another somewhat controversial one, the salt cap deduction. Here's the thing, salt isn't just granulized sodium chloride. Instead, it stands for state and local taxes. This encompasses things like your state income tax, property tax, or any other taxes you pay within your specific city. And prior to 2017, this amount was completely deductible against your federal income taxes. As an example, let's just say you made $100,000 but paid $10,000 for state taxes and $10,000 for property taxes. In that case, you could deduct $20,000 against your income, and all of a sudden, you're taxed as though you've only made $80,000. But not anymore. Starting in 2018, the maximum amount that you would be able to deduct is $10,000 for all state and local taxes, not adjusted to inflation. And that meant that residents in states like California, New York, and New Jersey were hit especially hard because all of a sudden, a big portion of their income was no longer deductible. In fact, I know plenty of people who actually ended up paying more money under the Tax Cuts and Jobs Act, even though they got tax cuts elsewhere. However, it was just announced that he plans to adjust the SALT cap deduction, which I think means we'll probably see a slightly more elevated rate than we did before. This is really good for people living in high income tax states, but his other policies could be really bad for some people who make money in certain industries, as you're about to see. Like number 4, eliminate tax breaks for billionaire sports team owners. Now, I'll admit, this is something I really wasn't familiar with until I started looking into it, and wow, it's really insane. Like, have you ever noticed how it's become really popular for billionaires to buy sports teams? I always thought, beyond a certain point, what else could you spend your money on? So you may as well buy a sports team. But as it turns out, that's just the tip of the iceberg. To start, when somebody buys a business, they could use the cost of the business to deduct against their personal income. And if the loss is great enough, that could be carried forward into future years. Well, guess what happens when someone buys a billion-dollar sports business? Exactly, a potential billion-dollar write-off. Now, normally, this rule is meant to help business owners offset the cost of materials, equipment, and buildings that degrade and wear down over time. But in sports, you don't have those concerns, and most of your money is made through advertising, which isn't going to spring a water leak or have machinery become obsolete when it gets too old. In fact, ProPublica published an article detailing how the Clippers reported a $700 million loss on paper, despite being very profitable through cash flow. Now, whether or not this is clever accounting or immoral tax avoidance is really in the eye of the beholder, but Trump wants to get rid of it, and I have a feeling in the future, deductions in sports teams are going to be a lot more limited. Just like another one that's rather extraordinary, the carried interest loophole. This essentially allows private equity, venture capitalists, or hedge fund managers to treat their income as long-term capital gains instead of as ordinary income. And as you're about to see, that difference is massive. Like, just consider that a hedge fund could take a 2% management fee and take 20% of profits from investment returns. In this case, if they have $1 billion under management and turn that into $1.2 billion, that is $60 million of income for the hedge fund. Except it's not really income. See, as the current law is written, since those proceeds are technically investment returns, that's able to be taxed at a long-term capital gains tax rate of 20% plus a 3.8% net investment tax for a total of 23.8%, compared to the 37% income tax rate for earned income. That savings adds up to a significant amount of money, especially when those people aren't even risking their own capital. Now, in fairness, this is not the first time the carried interest loophole is up on the chopping block. It's been heavily discussed for years, and every single time, any measures to quash it seem to fall through. But this time could be different, and it's long due for an overhaul, just like our next topic, and that would be tax cuts on products made in America. When it comes to this one, it's still in the beginning stages, and it's unclear exactly how this would work, but my guess is that this would provide some tax breaks for companies who manufacture their products domestically, or it could provide an incentive for customers to purchase locally made goods and services. This one is admittedly a bit vague, so we'll have to wait and see what happens over the next few weeks. Now, even though all of this sounds pretty good, keep in mind that at this point, it's just a proposal. Or I guess strong suggestion, and it still has to go through a lengthy process to go into effect. Like, first, the bill has to formally be drafted by the House of Representatives. In there, the bill is going to be discussed, debated, changed, and then they vote by majority rule on whether or not it's strong enough to go on to the next step. The Senate. They're going to argue way more, they'll take way more time, and they're going to dissect and tear apart every word to clear any misinterpretations. After that, a new draft is created, and if it passes the Senate, it goes back to the House of Representatives for another vote. From there, if they pass it, it goes to the president, who could sign off for final approval, or if he vetoes it, it goes back to the Senate, who could pass it still with a 2/3 vote. Basically, think of it like this. Remember when you were a kid and you'd come up with some crazy idea with your friend, and then you'd go to your friend's parents, pitch the idea, and if they say yes, then you could go to your parents and say, hey, we came up with this idea, their parents said yes, so you should say yes too. Well, that's basically the same thing that happens here, except with Congress and your entire livelihood. Now, in terms of all of this actually passing, it's a good chance because Republicans currently have the majority control of both the House and the Senate. So we're probably going to see a watered down version of everything we discussed potentially going into effect as soon as 2026. We're obviously going to have to stay tuned to see exactly what happens, but if you want to keep updated on this, please feel free to subscribe. I will do my best to update you anytime there's news. Thank you so much for watching. As always, remember to hit the like button, subscribe. Big thank you again to Incogni for sponsoring this video. The link is down below in the description to get started today. Thank you so much, and until next time.